Thank you for joining me. I'm Alex, and I would like to talk about the Home Depot. And it's another stock that surprised me when I looked into it, but we'll get to that at the very end. So they do home improvement retail and things for contractors and all kinds of stuff. And they do that mostly brick and mortar, some online, but not really all that much. Current price is $212 exactly, which gives them a market cap of $233 billion. They have a fairly reasonable dividend with 2.5% with a 51% payout ratio, which is not terrible at all. Current revenue $108 billion, which is up slightly. Earnings $11 billion, which is up significantly, which gives them a PE of 21, which is kind of too high for my taste. Total assets $44 billion, total liabilities $46 billion, which gives them a total stockholders' equity of negative $1.9 billion. And that was from positive 1.4, I think, the previous year. So they lost a lot in there. And that's also what really surprised me. I would figure that the Home Depot has a balance sheet that looks significantly better than that. And so I think that there really aren't that many risk factors at this time, because anything that wanted to disrupt them already has, and they only have basically one main competitor in Lowe's, and there are several smaller ones in, hardware shops like Ace and Meeks and stuff like that, and Walmart obviously being a fairly big one. But overall, I don't think that anything has changed in the past 5-ish years, and I don't think anything will change in the next 10 years-ish. Amazon obviously sells some stuff, but for the whole home improvement and contractor supplies, that doesn't really apply. So obviously also a lot of what they are selling cannot be shipped easily without sending a truck with a pallet. So the online shopping revolution really hasn't affected them as much as other retailers. So to sum that all up, I think the dividend is pretty nice with a payout ratio that's really nice. The PE is slightly high for me, and the balance sheet looks a lot worse than I expected. And so for growth investors, I don't think that you have anything here really. For dividend investors, I think the balance sheet looks pretty terrible, but I don't really think that they're in any imminent danger of going under. Still, I would be slightly careful, and I really don't think that the dividend yield really justifies buying a company that's as shaky as the Home Depot looks at this point. And for a value investor, I think it's kind of the same deal. The PE is too high, the balance sheet looks too terrible, and there isn't really much else going on besides a decent dividend. So I don't think that really any investors should invest in the Home Depot right now. I would really like to see them make a bit of a turnaround first, and then maybe go from there. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.